Question 1. Stakeholder feedback indicates a growing concern among members of an Alabama agricultural cooperative regarding potential reductions in educational outreach programs due to budget constraints. The cooperative's board is considering several options to address the financial shortfall. Which of the following approaches best aligns with ethical considerations in cooperative operations under Alabama law? Option A. Increase member dues and service fees substantially to cover the budget deficit, without first exploring internal cost-saving measures or offering tiered service options. Option B. Implement immediate and significant cuts to educational outreach programs to ensure short-term financial stability, with a plan to inform members of the changes after the decisions are finalized. Option C. Proactively engage members in a transparent dialogue about the cooperative's financial situation, the impact of potential program cuts, and collaboratively explore alternative funding sources or program adjustments that minimize negative effects on member education. Option D. Defer all non-essential capital expenditures and postpone necessary equipment upgrades for the cooperative's facilities to free up funds for educational programs, without consulting members on the long-term implications. The correct answer is C. Proactively engage members in a transparent dialogue about the cooperative's financial situation, the impact of potential program cuts, and collaboratively explore alternative funding sources or program adjustments that minimize negative effects on member education. Explanation: this scenario presents a professional challenge because it requires balancing the immediate financial needs of the cooperative with its long-term ethical obligations to its members and the broader community. The cooperative's board of directors must exercise careful judgment to ensure that decisions are not only legally compliant, but also uphold the cooperative principles of fairness, transparency, and member benefit, as enshrined in Alabama Cooperative Law. The best approach involves proactively engaging with members to understand their concerns and explore alternative solutions that align with the cooperative's mission and financial sustainability. This includes transparently communicating the cooperative's financial situation, the rationale behind potential changes, and actively seeking member input on how to mitigate negative impacts. This approach is correct because it prioritizes member engagement and transparency, which are fundamental ethical considerations in cooperative governance under Alabama law. It fosters trust and ensures that decisions are made with the informed consent of the membership, thereby upholding the cooperative's democratic principles and long-term viability. An approach that prioritizes immediate cost-cutting measures without adequate member consultation is ethically flawed. While financial prudence is necessary, failing to inform members about significant changes that affect their benefits or services, or the reasons behind such decisions, violates the principle of transparency and can erode member trust. This can lead to dissatisfaction and potentially legal challenges under Alabama cooperative statutes that emphasize member rights and participation. Another unacceptable approach is to delay addressing the financial shortfall by deferring necessary maintenance or service improvements. This may seem like a short-term solution, but ultimately compromises the cooperative's ability to serve its members effectively and can lead to greater costs and member dissatisfaction in the future. Ethically, this demonstrates a lack of foresight and a failure to act in the best long-term interests of the cooperative and its members, which is contrary to the duty of care expected of cooperative directors under Alabama law. Finally, an approach that focuses solely on increasing member fees or charges without exploring other cost-saving measures or offering alternative service levels is also problematic. While revenue generation is important, such a unilateral decision without seeking member input or demonstrating a clear need and justification can be perceived as unfair and exploitative, undermining the cooperative spirit and potentially violating principles of equitable member contribution. Professionals should employ a decision-making framework that begins with a thorough understanding of the cooperative's financial health and its legal and ethical obligations. This should be followed by open and honest communication with all stakeholders, particularly members, to gather feedback and explore a range of potential solutions. Collaborative problem-solving, where feasible, is key to ensuring that decisions are both financially sound and ethically defensible, reinforcing the cooperative's commitment to its members and its foundational principles. Question 2. Regulatory review indicates that understanding the historical development of cooperatives in Alabama is crucial for effective stakeholder engagement, which historical perspective most accurately informs current cooperative practices and legal interpretations under Alabama cooperative law. Option A. The historical development of cooperatives in Alabama is best understood through the lens of member ownership, democratic control, and the economic empowerment of producers, reflecting their foundational purpose and ongoing legal relevance. Option B. The historical development of cooperatives in Alabama is primarily a story of evolving corporate legal structures and regulatory compliance, with less emphasis on the underlying cooperative ethos. Option C. The historical development of cooperatives in Alabama is best characterized by their adaptation to modern market demands and competitive business strategies, often superseding earlier cooperative principles. Option D. The historical development of cooperatives in Alabama is largely an individualistic pursuit of entrepreneurial success, with collective action serving as a secondary or incidental factor. The correct answer is A. The historical development of cooperatives in Alabama is best understood through the lens of member ownership, democratic control, and the economic empowerment of producers, reflecting their foundational purpose and ongoing legal relevance. Explanation. Scenario analysis. This scenario presents a professional challenge because it requires understanding the historical evolution of cooperatives in Alabama and how that development influences current stakeholder perceptions and engagement. The challenge lies in discerning which historical perspective most accurately reflects the foundational principles and ongoing relevance of cooperative law in Alabama, thereby guiding effective stakeholder relations. Misinterpreting this historical context can lead to misaligned strategies, ineffective communication, and ultimately, a failure to uphold the cooperative spirit and legal framework. Correct approach analysis. The best professional approach involves recognizing that the historical development of cooperatives in Alabama is intrinsically linked to the principles of member ownership, democratic control, and the economic empowerment of its members. Early cooperative movements, often driven by agricultural needs and a desire for collective bargaining power, laid the groundwork for the legal structures and operational philosophies that persist today. Understanding this foundational period, where the emphasis was on mutual benefit and shared risk among producers, provides the most relevant lens through which to interpret current stakeholder expectations and legal obligations under Alabama cooperative law. This perspective acknowledges that the core purpose of cooperatives, as established historically, remains central to their identity and legal standing. Incorrect approach is analysis. Focusing solely on the legalistic evolution of corporate structures without acknowledging the underlying cooperative ethos is an incomplete approach. While Alabama law has certainly evolved to govern cooperatives, reducing their history to mere statutory changes overlooks the social and economic drivers that shape them. This approach fails to capture the stakeholder-centric nature of cooperatives. Another incorrect approach is to prioritize the modern business strategies and market competitiveness of cooperatives above their historical roots. While adaptability is crucial, an exclusive focus on contemporary market dynamics can lead to decisions that inadvertently dilute the cooperative principles of member benefit and democratic governance, which are deeply embedded in their historical development and legal framework in Alabama. Finally, an approach that emphasizes the individual entrepreneurial spirit over collective action misrepresents the fundamental nature of cooperatives. Cooperatives, by definition, are built on collective action and shared responsibility. Their historical development in Alabama is a testament to the power of pooling resources and efforts for mutual gain, not individualistic pursuits. Professional reasoning. Professionals dealing with Alabama cooperatives should adopt a stakeholder-centric approach grounded in the historical development of cooperative principles. This involves 1. Researching the foundational legislation and early organizational efforts of cooperatives in Alabama to understand their original intent and purpose. 2. Analyzing how these historical principles of member ownership, democratic control, and mutual benefit have been codified and continue to be upheld or challenged by current Alabama cooperative law. 3. Engaging stakeholders by communicating how the cooperative's current operations align with these enduring historical values and legal mandates. 4. Continuously evaluating decisions against the backdrop of cooperative history and Alabama's specific legal framework to ensure long-term viability and adherence to cooperative ideals. Question 3. Considering the governance structures outlined in Alabama Cooperative Law, which of the following best describes the appropriate allocation of authority and responsibility among the Board of Directors, committees, and the General Assembly for strategic decision-making and operational oversight? Option A. The Board of Directors can delegate all strategic and operational decision-making authority to committees of their choosing, with minimal oversight, as long as these committees report their findings to the General Assembly annually. Option B. The Board of Directors is responsible for strategic oversight and policy setting, with authority to appoint committees for specific functions and to delegate operational management to appointed officers, all while remaining accountable to the General Assembly, which retains ultimate authority for electing directors and approving fundamental changes. Option C. The General Assembly should directly manage the cooperative's daily operations and make all significant policy decisions, with the Board of Directors acting primarily as administrative support. Option D. Committees, once formed, should have the power to make independent, binding decisions on behalf of the cooperative, with the Board of Directors and General Assembly only intervening in cases of extreme financial distress. The correct answer is B. The Board of Directors is responsible for strategic oversight and policy setting, with authority to appoint committees for specific functions and to delegate operational management to appointed officers, all while remaining accountable to the General Assembly, which retains ultimate authority for electing directors and approving fundamental changes. Explanation: performance analysis shows that the effectiveness of a cooperative's governance structures is paramount to its success and adherence to Alabama Cooperative Law. This scenario presents a professional challenge because it requires balancing the need for efficient decision-making with the fundamental principles of member participation and oversight enshrined in cooperative law. Misinterpreting or neglecting these principles can lead to legal challenges, loss of member trust, and ultimately the failure of the cooperative. Careful judgment is required to ensure that governance mechanisms are robust, transparent, and legally compliant. The best approach involves a clear delineation of responsibilities between the Board of Directors, committees, and the General Assembly, as mandated by Alabama Cooperative Law. The Board of Directors, elected by the General Assembly, is responsible for the strategic direction and oversight of the cooperative's operations. Committees, appointed by the Board, are tasked with specific functions, providing focused expertise and recommendations. The General Assembly, comprising all members, retains ultimate authority, exercising its power through voting on major decisions, electing directors, and approving bylaws. This structured approach ensures accountability, informed decision-making, and democratic participation, aligning with the spirit and letter of Alabama Cooperative Law, which emphasizes member control and director fiduciary duties, an approach where the Board of Directors unilaterally delegates all operational decision-making to a single, unelected committee, bypassing the General Assembly's approval for significant strategic shifts, fails to uphold the principle of member control. Alabama Cooperative Law vests ultimate authority in the membership, and such delegation undermines this fundamental right. Furthermore, allowing a committee to operate without clear oversight from the Board, which is itself accountable to the members, creates a governance vacuum and increases the risk of mismanagement and conflicts of interest. Another incorrect approach involves the General Assembly attempting to micromanage day-to-day operations by directly issuing directives to operational staff without going through the Board of Directors. While the General Assembly has oversight, direct operational interference bypasses the established chain of command and undermines the Board's authority and responsibility for management. This can lead to confusion, inefficiency, and potential legal liabilities for the cooperative, as it deviates from the legally defined roles and responsibilities. Finally, an approach where committees operate with significant autonomy, making binding decisions on behalf of the cooperative without formal Board approval or ratification by the General Assembly, is also flawed. Committees are advisory or specialized bodies. Their authority is derived from and limited by the Board. Exceeding this delegated authority violates the hierarchical structure of governance and can lead to inconsistent or unauthorized actions, exposing the cooperative to legal and financial risks. Professionals should employ a decision-making framework that prioritizes understanding the specific provisions of Alabama Cooperative Law regarding governance. This involves clearly identifying the roles, responsibilities, and limitations of the Board of Directors, committees, and the General Assembly. When faced with governance challenges, Professionals should consult the cooperative's bylaws and relevant statutes, seek legal counsel if necessary, and always ensure that decisions promote transparency, accountability, and member participation in accordance with legal requirements. Question 4. Operational review demonstrates that a group of independent farmers in Alabama have organized to collectively market their harvested crops and jointly purchase essential farm supplies. Considering the diverse types of cooperatives recognized under Alabama law, which classification best aligns with the primary purpose and operational structure of this farmer collective? Option A. A worker cooperative, because the farmers are contributing labor to the collective enterprise. Option B. A housing cooperative, given that the members are pooling resources for a shared economic endeavor. Option C. A consumer cooperative, as members are collectively acquiring goods, farm supplies for their individual use. Option D. An agricultural cooperative, due to its focus on the collective marketing of agricultural products and joint procurement of farm inputs for its farmer members. The correct answer is D. An agricultural cooperative, due to its focus on the collective marketing of agricultural products and joint procurement of farm inputs for its farmer members. Explanation. This scenario presents a professional challenge because it requires a nuanced understanding of cooperative law in Alabama, specifically differentiating between various cooperative types based on their core operational purpose and membership. Misclassifying a cooperative can lead to significant legal, financial, and operational repercussions, including noncompliance with Alabama's cooperative law, potential tax liabilities, and a failure to meet the specific needs and legal protections afforded to its members. Careful judgment is required to align the cooperative structure and activities with the most appropriate legal classification under Alabama statutes. The correct approach involves accurately identifying the cooperative's primary function and membership base, as defined by Alabama law. For a group of independent farmers in Alabama pooling their resources to collectively market their produce and purchase farm supplies, the most fitting classification is an agricultural cooperative. Alabama law, particularly statutes governing agricultural cooperatives, recognizes their role in enhancing the economic well-being of farmers through joint action. This classification allows them to leverage specific legal provisions related to marketing agreements, joint purchasing, and member benefits that are tailored to the agricultural sector, ensuring compliance and operational efficiency. An incorrect approach would be to classify this group as a consumer cooperative. Consumer cooperatives are typically formed by individuals who purchase goods or services for personal use, such as a grocery co-op. Applying this classification to farmers pooling resources for production and marketing inputs would misrepresent their operational purpose and fail to recognize the specific legal framework designed for agricultural entities in Alabama, potentially exposing them to regulations not applicable or beneficial to their situation. Another incorrect approach would be to classify them as a worker cooperative. Worker cooperatives are owned and controlled by their employees, who share in the profits and decision-making. The scenario describes independent farmers, not employees, pooling resources. This misclassification ignores the fundamental ownership and operational structure of the group and would lead to the application of inappropriate legal and governance principles. Furthermore, classifying them as a housing cooperative would be entirely inappropriate. Housing cooperatives are focused on providing residential property ownership and management for their members. This has no relevance to the described activities of farmers marketing produce and purchasing supplies. The professional reasoning process for similar situations should begin with a thorough understanding of the client or organization's core activities and membership. This should be followed by a detailed review of the relevant Alabama cooperative law to identify the definitions and characteristics of each cooperative type. A comparative analysis of the group's operations against these definitions is crucial. When in doubt, consulting with legal counsel specializing in Alabama cooperative law is the most prudent step to ensure accurate classification and compliance. Question 5. The assessment process reveals a member of an Alabama agricultural cooperative, Cotton Growers United, believes they have been unfairly charged for services not rendered, leading to a significant financial discrepancy. The member has approached the cooperative's management demanding immediate reimbursement and threatening to publicize their grievance widely if not satisfied. Considering the legal remedies available under Alabama cooperative law, which course of action best addresses this dispute while adhering to professional and legal standards? Option A. The member should cease all cooperative payments and dues until the cooperative provides a satisfactory explanation and reimbursement for the disputed charges. Option B. The member should immediately file a lawsuit in an Alabama state court against the cooperative for breach of contract and misrepresentation, seeking damages and injunctive relief to halt further charges. Option C. The member should bypass the cooperative's internal processes and directly contact the Alabama Department of Agriculture and Industries to file a formal complaint regarding financial mismanagement. Option D. The member should formally submit a written grievance to the cooperative's board of directors, referencing specific bylaws related to member disputes and financial accounting, and request a formal review and response within a timeframe stipulated by the cooperative's governing documents or Alabama law. Correct answer is D. The member should formally submit a written grievance to the cooperative's board of directors, referencing specific bylaws related to member disputes and financial accounting, and request a formal review and response within a timeframe stipulated by the cooperative's governing documents or Alabama law. Explanation. The assessment process reveals a scenario that is professionally challenging due to the inherent conflict between a member's perceived entitlement and the cooperative's established governance and financial realities. Careful judgment is required to navigate these disputes in a manner that upholds the cooperative's legal structure, maintains member relations, and avoids costly litigation. The Alabama Cooperative Law exam emphasizes the importance of adhering to the specific remedies outlined within the cooperative's bylaws and Alabama state law, rather than resorting to external or unauthorized actions. The best professional approach involves a thorough review of the cooperative's governing documents and relevant Alabama statutes to identify the prescribed dispute resolution mechanisms. This includes examining the bylaws for provisions on member grievances, mediation, arbitration, or specific legal actions permitted for financial disputes. Subsequently, engaging in the formal, documented process outlined in these documents, such as presenting a formal complaint to the board or initiating a mediation process as stipulated, is the most legally sound and ethically responsible course of action. This approach ensures that the dispute is addressed within the framework established by the cooperative and Alabama law, providing a clear path for resolution and minimizing the risk of procedural errors that could invalidate any outcome. An incorrect approach would be to unilaterally seek legal counsel and file a lawsuit against the cooperative without first exhausting any internal dispute resolution procedures mandated by the bylaws or Alabama law. This bypasses the cooperative's established governance and can be seen as a failure to act in good faith, potentially leading to sanctions or dismissal of the claim due to failure to exhaust administrative remedies. Another incorrect approach is to attempt to resolve the dispute through informal channels with individual board members outside of official meetings or grievance procedures. This lacks the necessary formality and documentation, making it difficult to establish a clear record of the dispute and its attempted resolution, and it undermines the collective decision-making authority of the board. Finally, withholding cooperative payments or dues as a form of protest is a self-help remedy that is generally not permitted and can lead to the member's own expulsion or further legal action against them for breach of contract. Professionals should employ a decision-making framework that prioritizes understanding the governing legal framework and the cooperative's internal rules. This involves meticulous document review, seeking clarification from cooperative leadership or legal counsel specializing in cooperative law when necessary, and strictly adhering to the procedural requirements for dispute resolution. The goal is to achieve a resolution that is both legally compliant and fair, preserving the integrity of the cooperative structure. Question 6. The efficiency study reveals that a significant number of newer members in an Alabama agricultural cooperative are expressing dissatisfaction with their level of influence in cooperative decision-making, contrasting with the established practices favored by long-standing members. Considering the Alabama Cooperative Marketing Act, which of the following represents the most appropriate course of action for the cooperative's management to address these concerns while upholding member rights and obligations? Option A. Immediately implement changes to the voting structure to grant newer members a proportionally larger say in decisions, bypassing a formal review of bylaws or member consultation to expedite resolution of their grievances. Option B. Conduct a comprehensive review of the cooperative's bylaws and the Alabama Cooperative Marketing Act to identify the specific rights and obligations of all members, and then develop a transparent communication plan to educate members on these rights and explore potential adjustments to governance structures that are legally permissible and equitable. Option C. Inform the newer members that cooperative governance has historically been managed by long-standing members and that their current level of influence is consistent with established norms, suggesting they familiarize themselves with cooperative principles over time. Option D. Focus on addressing the concerns of the long-standing members who are resistant to change, as their historical contributions and understanding of the cooperative's operational framework are deemed more critical to its continued success. The correct answer is B. Conduct a comprehensive review of the cooperative's bylaws and the Alabama Cooperative Marketing Act to identify the specific rights and obligations of all members, and then develop a transparent communication plan to educate members on these rights and explore potential adjustments to governance structures that are legally permissible and equitable. Explanation: the efficiency study reveals a potential conflict between the established practices of a long-standing agricultural cooperative in Alabama and the evolving needs and expectations of its newer members. This scenario is professionally challenging because it requires balancing the historical operational framework and the rights of existing members with the statutory obligations of the cooperative to all its members, including those who have recently joined. Navigating this requires a deep understanding of Alabama cooperative law, specifically the rights and obligations conferred upon members. The best approach involves a thorough review of the cooperative's bylaws and the Alabama Cooperative Marketing Act to determine the precise rights and obligations of all members, both long-standing and new. This includes understanding how membership is defined, the voting rights associated with different membership classes, and the procedures for member participation in governance and decision-making. By adhering strictly to the codified rights and obligations, the cooperative can ensure fair treatment and equitable engagement for all members, thereby upholding its legal and ethical responsibilities. This approach directly addresses the core of the members' concerns by grounding solutions in established legal principles and the cooperative's own governing documents. An incorrect approach would be to dismiss the concerns of newer members based on the cooperative's historical practices or the perceived lack of understanding of cooperative principles by these members. This fails to acknowledge that Alabama law grants specific rights to all members, regardless of their tenure. Ethically, it creates an exclusionary environment, and legally, it could lead to challenges based on discriminatory practices or failure to uphold statutory member rights. Another incorrect approach would be to implement changes to member rights or obligations without proper consultation or adherence to the amendment procedures outlined in the bylaws and Alabama law. This bypasses the democratic processes inherent in cooperative governance and potentially infringes upon the vested rights of existing members, leading to legal disputes and a breakdown of trust. Finally, an approach that prioritizes the demands of the most vocal members without a comprehensive assessment of legal obligations and the impact on all membership classes is also professionally unsound. This reactive strategy ignores the need for balanced decision-making that respects the rights and obligations of the entire membership as defined by law and the cooperative's governing documents. Professionals should employ a decision-making framework that begins with a clear understanding of the governing legal framework, Alabama Cooperative Marketing Act, and the cooperative's internal bylaws. This should be followed by an objective assessment of member concerns, a comparative analysis of how these concerns align with legal rights and obligations, and a transparent communication process with all members regarding proposed solutions. The ultimate goal is to foster an inclusive and legally compliant cooperative environment. Question 7. The assessment process reveals that the Articles of Incorporation for an Alabama cooperative state that each member is entitled to one vote, regardless of their patronage. However, the cooperative's operational bylaws, which have been in place for several years, stipulate that voting rights are allocated based on a member's level of patronage, with higher patronage translating to more votes. Considering the Alabama Cooperative Law, which of the following actions best addresses this discrepancy? Option A. Immediately proceed with amending the Articles of Incorporation to reflect the current patronage-based voting system outlined in the bylaws. Option B. Continue operating under the bylaws as the established operational practice has been accepted by the membership for an extended period. Option C. Advise the membership that the bylaws supersede the articles of incorporation in matters of operational governance. Option D. Initiate a process to amend the bylaws to align with the articles of incorporation, ensuring each member has one vote as stated in the filed charter. Correct answer is D. Initiate a process to amend the bylaws to align with the articles of incorporation, ensuring each member has one vote as stated in the filed charter. Explanation. The assessment process reveals a common challenge in cooperative governance, ensuring that the foundational documents accurately reflect the cooperative's operational reality and adhere to Alabama law. This scenario is professionally challenging because a discrepancy between the articles of incorporation and the bylaws, especially concerning member voting rights, can lead to disputes, disenfranchisement, and potential legal challenges. Careful judgment is required to identify and rectify such inconsistencies to maintain good governance and compliance. The best professional practice involves a thorough review of both the articles of incorporation and the bylaws to identify any conflicts, with a clear understanding that the articles of incorporation, as filed with the state of Alabama, generally hold precedence in cases of direct conflict regarding fundamental governance structures. This approach ensures that the cooperative operates in accordance with its legally established charter, specifically, Alabama law, as outlined in the Alabama Cooperative Statutes, dictates that the articles of incorporation are the primary governing document filed with the state. Any provisions in the bylaws that contradict the articles, particularly on matters like voting rights which are fundamental to cooperative structure, are typically considered invalid or subordinate to the articles. Therefore, identifying and addressing this conflict by aligning the bylaws with the articles is the legally sound and ethically responsible course of action. An approach that prioritizes amending the bylaws to reflect the operational practice without considering the articles of incorporation is professionally unacceptable. This failure ignores the hierarchical nature of governing documents in Alabama law, which establishes the articles as the supreme charter. Such an action could lead to the cooperative operating in violation of its own filed charter, creating legal vulnerabilities and undermining member confidence. Another professionally unacceptable approach is to ignore the discrepancy altogether, assuming that the established operational practice will suffice. This passive stance fails to address a fundamental governance flaw and leaves the cooperative exposed to future legal challenges. It neglects the duty of care owed to the members and the cooperative itself to maintain clear and legally compliant governing documents. Finally, an approach that immediately seeks to amend the articles of incorporation without first thoroughly analyzing the conflict and exploring less drastic measures like amending the bylaws to conform to the articles, if the articles permit the desired voting structure, is also professionally questionable. While amending the articles is an option, it is a more significant undertaking and should be considered after a comprehensive assessment of the conflict and potential resolutions. Professionals should employ a systematic decision-making process when encountering such discrepancies. This involves 1. Identifying the specific conflict between the articles and bylaws. 2. Consulting the relevant Alabama cooperative statutes to understand the legal hierarchy and requirements for amendments. 3. Analyzing the implications of the conflict on member rights and cooperative operations. 4. Determining the most legally compliant and operationally sound resolution, which may involve amending the bylaws to align with the articles, or, if necessary and permissible, amending the articles themselves. 5. Communicating the proposed resolution clearly to the board and members. Question 8. In the context of an agricultural cooperative operating under Alabama Cooperative Law, a long-standing member is experiencing significant personal financial hardship, leading to a substantial delinquency in their required patronage capital contributions. The cooperative's board is aware of the member's situation, but is also concerned about the impact of this delinquency on the cooperative's overall financial health and its ability to meet its obligations to other members. What is the most appropriate course of action for the cooperative's management and board to take? Option A. Immediately suspend all services and benefits provided by the cooperative to the member until the full amount of the delinquency is settled. Option B. Publicly announce the member's delinquency at the next general membership meeting to encourage peer pressure for repayment. Option C. Initiate formal communication with the member to discuss the delinquency, review cooperative policies on member contributions, and explore potential repayment plans or other mutually agreeable solutions, while ensuring all actions align with Alabama Cooperative Law and the cooperative's bylaws. Option D. The cooperative should absorb the loss by writing off the members' outstanding contributions as a bad debt, without any direct communication or attempt at resolution with the member. The correct answer is C. Initiate formal communication with the member to discuss the delinquency, review cooperative policies on member contributions, and explore potential repayment plans or other mutually agreeable solutions, while ensuring all actions align with Alabama Cooperative Law and the cooperative's bylaws. Explanation. Scenario analysis. This scenario presents a common challenge in cooperative governance, where a member's personal financial difficulties could potentially impact the cooperative's financial stability and operational integrity. The challenge lies in balancing the cooperative's fiduciary duty to protect its assets and members' interests with the ethical considerations of dealing with a distressed member. Alabama Cooperative Law requires a clear understanding of member rights and responsibilities, as well as the cooperative's obligations, to navigate such situations without violating legal or ethical standards. Correct approach analysis. The best professional practice involves a direct, transparent, and legally compliant approach. This means acknowledging the member's situation while clearly communicating the cooperative's policies and legal obligations regarding outstanding debts. It requires initiating formal communication channels to discuss repayment options, potential payment plans, or, if necessary, the consequences of non-payment as outlined in the cooperative's bylaws and Alabama law. This approach upholds the cooperative's responsibility to all members by addressing the issue systematically and fairly, ensuring that the cooperative's financial health is not jeopardized. It aligns with the principles of good governance and the legal framework governing cooperatives in Alabama, which emphasizes due process and adherence to established rules. Incorrect approach is analysis. One incorrect approach involves ignoring the outstanding debt in the hope that the member will resolve their personal issues and repay the cooperative without intervention. This is professionally unacceptable because it neglects the cooperative's fiduciary duty to manage its finances prudently and can lead to significant financial losses, impacting all members. It also fails to address the potential for the situation to worsen, making recovery more difficult later. This approach violates the principle of equitable treatment of all members, as it allows one member's debt to potentially burden others. Another incorrect approach is to immediately pursue aggressive collection tactics, such as public disclosure of the debt or immediate seizure of assets, without first attempting to communicate and negotiate with the member. This can be legally problematic and ethically questionable, potentially violating privacy rights or specific collection procedures mandated by Alabama law or the cooperative's bylaws. Such actions can damage the cooperative's reputation and create unnecessary animosity among members, undermining the cooperative spirit. A third incorrect approach is to offer a substantial, uncollateralized loan or subsidy to the member without proper due diligence, formal approval processes, or consideration of the cooperative's financial capacity. While seemingly compassionate, this can expose the cooperative to undue financial risk and may not be permissible under Alabama Cooperative Law, which typically requires sound financial management and adherence to established lending or assistance policies. This approach can also set a precedent that is unsustainable and unfair to members who have met their financial obligations. Professional reasoning. Professionals facing such situations should first consult the cooperative's bylaws and relevant Alabama cooperative law to understand the established procedures for handling member delinquencies. A structured communication plan should be developed, starting with a formal notification to the member detailing the outstanding amount and the consequences of non-payment. This should be followed by an offer to discuss repayment options, such as a structured payment plan, within the bounds of cooperative policy and legal permissibility. If a resolution cannot be reached through communication, the cooperative should then follow its established procedures for further action, ensuring all steps are documented and legally sound. This systematic and transparent process protects the cooperative's interests while respecting the members' rights. Question 9. Governance review demonstrates that the board of directors for an Alabama-based agricultural cooperative is considering significant amendments to its operational bylaws, including changes to member voting rights and capital contribution requirements. The board believes these changes are crucial for the cooperative's future growth and efficiency. What is the most appropriate course of action for the board to take regarding these proposed bylaw amendments? Option A. Proactively communicate the proposed bylaw amendments and their rationale to the membership well in advance of the annual meeting, soliciting feedback and facilitating discussion before presenting them for a formal vote. Option B. Unilaterally amend the bylaws during a board meeting and present the finalized changes to the membership at the annual meeting as a done deal. Option C. Implement the proposed bylaw changes immediately following board approval, assuming member ratification will be a formality due to the perceived benefits. Option D. Inform the membership about the proposed bylaw changes only at the annual meeting, providing a brief overview without allowing for substantial discussion or questions. The correct answer is A. Proactively communicate the proposed bylaw amendments and their rationale to the membership well in advance of the annual meeting, soliciting feedback and facilitating discussion before presenting them for a formal vote. Explanation. Scenario analysis. This scenario presents a common challenge in cooperative governance, balancing the need for efficient decision-making with the fundamental principle of member participation and transparency. Challenge lies in ensuring that, while the board acts decisively, it does not overstep its authority or alienate the membership, which is the bedrock of cooperative existence. Adherence to Alabama cooperative law is paramount to maintaining the legal and ethical standing of the cooperative. Correct approach analysis. The best approach involves the board proactively communicating its proposed strategic direction, including potential changes to operational bylaws, to the membership well in advance of the annual meeting. This communication should clearly outline the rationale behind the proposed changes and provide ample opportunity for member feedback and discussion. This aligns with Alabama cooperative law, which emphasizes member control and participation. Specifically, Alabama Code Title 10A, Chapter 10, Alabama Cooperative Law, mandates that members have the right to be informed and to vote on significant matters affecting the cooperative. By providing advance notice and soliciting feedback, the board upholds the cooperative principle of democratic member control and ensures that any bylaw amendments are truly representative of the membership's will, thereby avoiding potential legal challenges based on procedural impropriety or lack of informed consent. Incorrect approaches analysis. One incorrect approach is for the board to unilaterally amend the bylaws during a board meeting, and then present these changes to the membership as a fait accompli at the annual meeting. This fails to respect the members' right to participate in the governance of their cooperative and violates the spirit, if not the letter, of Alabama cooperative law, which expects informed member consent for such fundamental changes. It undermines democratic member control and can lead to distrust and dissent within the membership. Another incorrect approach is to delay informing the membership about the proposed bylaw changes until the annual meeting itself, providing only a brief overview without sufficient time for deliberation or questions. This approach also circumvents the principle of informed member participation. Alabama cooperative law implicitly requires sufficient notice and opportunity for members to understand and deliberate on proposals that significantly alter the cooperative's operational framework. This lack of transparency can be viewed as an attempt to push through changes without genuine member buy-in, potentially leading to disputes and challenges to the validity of the amendments. A further incorrect approach is to assume that because the board has the authority to propose bylaw changes, it can implement them without a formal vote or ratification by the membership, even if the proposed changes are deemed beneficial by the board. While the board initiates proposals, Alabama cooperative law generally requires member approval for amendments to bylaws, as these are foundational documents governing the cooperative's structure and operations. This approach disregards the ultimate authority of the membership in shaping the cooperative's governance. Professional reasoning. Professionals in cooperative governance must prioritize transparency, member engagement, and strict adherence to the governing statutes. The decision-making process should always begin with understanding the legal framework, Alabama cooperative law, and the cooperative principles. When considering significant changes like bylaw amendments, the professional approach is to engage the membership early and continuously, ensuring they are fully informed and have a meaningful opportunity to provide input and vote. This proactive and inclusive strategy not only ensures legal compliance, but also fosters a stronger, more engaged, and sustainable cooperative. Question 10. Benchmark analysis indicates that the management of a farmers cooperative in Alabama is considering how to allocate its fiscal year-end net surplus of $150,000. The cooperative's bylaws, consistent with Alabama Cooperative Law, require that at least 10% of net surplus be retained for capital reserves before any patronage dividends are distributed. Additionally, the cooperative has $20,000 in unallocated losses from the previous year that must be covered by current year surplus before patronage dividends can be paid. The cooperative's total member patronage for the year was $500,000. If the cooperative decides to distribute the maximum possible amount as patronage dividends, what is the total dollar amount of patronage dividends that can be distributed to members, assuming all other statutory and bylaw requirements for retained earnings are met? Option A, $130,000. Option B, $125,000. Option C, $115,000. Option D, $105,000. The correct answer is C, $115,000. Explanation: scenario analysis. This scenario presents a common challenge in cooperative financial management, balancing the need for retained earnings to fund growth and operational stability with the cooperative's obligation to distribute surplus to its members. The cooperative's bylaws and Alabama Cooperative Law are paramount in guiding this decision. Mismanagement of retained earnings or improper distribution can lead to financial distress, member dissatisfaction, and legal noncompliance. The challenge lies in accurately calculating the available surplus and determining the appropriate allocation based on legal requirements and cooperative principles. Correct approach analysis. The best professional practice involves a meticulous calculation of the cooperative's net surplus for the fiscal year, strictly adhering to the accounting principles and definitions outlined in Alabama Cooperative Law. This includes identifying all operating revenues and expenses, accounting for depreciation, and making necessary adjustments for non-operating items. Subsequently, the cooperative must determine the portion of this net surplus that is legally required to be retained, such as for capital reserves or to cover losses from prior years, as stipulated by Alabama Cooperative Law and the cooperative's own articles of incorporation and bylaws. The remaining distributable surplus is then allocated to members based on their patronage, in accordance with the cooperative's established patronage dividend policy, which itself must be compliant with Alabama law. This approach ensures legal compliance, financial prudence, and upholds the cooperative's member-centric ethos by returning value based on participation. Incorrect approach is analysis. One incorrect approach would be to arbitrarily decide to retain a fixed percentage of gross revenue for capital improvements without a detailed calculation of net surplus and consideration of legal retention requirements. This fails to account for actual operating expenses and potential losses, potentially overstating the available surplus for distribution or understating the necessary retained earnings, violating the principle of accurate financial reporting and potentially Alabama Cooperative Law's provisions on surplus distribution. Another incorrect approach would be to distribute the entire net surplus as patronage dividends without first setting aside legally mandated or prudent reserves for future capital expenditures or to cover potential shortfalls. This ignores the long-term financial health of the cooperative and the legal requirements for capital reserves, potentially jeopardizing the cooperative's ability to operate and grow, and violating Alabama Cooperative Law's emphasis on financial stability. A third incorrect approach would be to distribute patronage dividends based on share ownership rather than patronage, even if the cooperative's bylaws and Alabama law mandate patronage-based distribution. This fundamentally misinterprets the cooperative principle of member benefit based on economic participation and directly contravenes the legal framework governing cooperative surplus allocation in Alabama. Professional reasoning. Professionals managing cooperative finances must adopt a systematic, legally compliant, and principle-driven approach. This involves 1. Thoroughly understanding Alabama Cooperative Law and the cooperative's governing documents, articles of incorporation and bylaws. 2. Implementing robust accounting practices to accurately determine net surplus. 3. Differentiating between legally required retained earnings, prudent reserves, and distributable surplus. 4. Applying the cooperative's established and legally compliant patronage dividend policy for distribution. 5. regularly reviewing and updating financial policies to align with legal changes and the cooperative's strategic objectives. This structured decision-making process ensures both financial integrity and adherence to the cooperative's unique legal and operational structure. Question 11. The assessment process reveals that a newly formed agricultural cooperative in Alabama is seeking to establish its initial capital structure. Considering the principles of cooperative governance and the specific regulatory environment of Alabama, which of the following strategies best positions the cooperative for long-term financial health and member benefit? Option A. A strategy that prioritizes securing large, unsecured loans from members without formalizing them as equity or debt instruments. Option B. An approach focused solely on maximizing member equity through retained patronage dividends, foregoing any external debt or grant funding. Option C. A strategy heavily reliant on debt financing from financial institutions, with minimal emphasis on member equity contributions. Option D. A diversified capital strategy prioritizing member equity, supplemented by prudent debt financing for asset acquisition, and active pursuit of relevant grant opportunities. The correct answer is D. A diversified capital strategy prioritizing member equity, supplemented by prudent debt financing for asset acquisition, and active pursuit of relevant grant opportunities. Explanation. The assessment process reveals a scenario where a newly formed agricultural cooperative in Alabama is seeking to establish its initial capital structure. This is professionally challenging because the cooperative's long-term viability and ability to serve its members are directly tied to its financial foundation. Missteps in structuring its capital can lead to operational inefficiencies, member dissatisfaction, and potential legal or regulatory noncompliance under Alabama law. Careful judgment is required to balance the need for capital with the cooperative principles of member ownership and control. The best approach involves a diversified capital strategy that prioritizes member equity as the primary source of funding, supplemented by debt financing for specific, tangible assets, and actively exploring grant opportunities aligned with the cooperative's mission. This aligns with the Alabama Cooperative Law, which emphasizes member participation and benefit. Member equity, through the purchase of shares or patronage dividends retained as equity, ensures that control remains with the members and aligns their financial interests with the cooperative's success. Debt financing, when used prudently for income-generating assets, can leverage member capital without diluting control. Seeking grants, particularly those focused on rural development or agricultural innovation, can provide non-dilutive capital that supports the cooperative's mission and reduces the overall financial burden on members. This comprehensive strategy fosters financial stability and upholds cooperative governance principles. An approach that relies solely on significant debt financing without a strong member equity base is professionally unacceptable. This strategy risks placing the cooperative under undue financial pressure from creditors, potentially compromising its ability to serve members and adhere to cooperative principles. It can lead to a situation where external lenders have significant influence over the cooperative's operations, undermining member control. Furthermore, an approach that neglects to explore available grant funding, especially when such grants are designed to support agricultural cooperatives and their development, represents a failure to prudently manage resources and maximize the cooperative's potential for growth and member benefit. This oversight can lead to missed opportunities for non-dilutive capital infusion. Finally, an approach that focuses exclusively on member equity, without considering the need for external debt or grants for specific growth initiatives, might limit the cooperative's capacity to undertake larger projects that could ultimately benefit members more significantly. Professionals should employ a decision-making framework that begins with a thorough understanding of the cooperative's strategic goals and operational needs. This should be followed by an assessment of available capital sources under Alabama Cooperative Law, considering the implications of each for member control, financial risk, and long-term sustainability. A comparative analysis of the potential impact of different capital structures on the cooperative's financial health and member benefits is crucial. Prioritizing member equity, strategically utilizing debt, and actively seeking appropriate grants will lead to a robust and compliant capital structure. Question 12. The assessment process reveals that a cooperative operating under Alabama Cooperative Law is considering its options for presenting its annual financial information to its members. The board is debating the most appropriate method to ensure transparency and accountability. Which of the following approaches best aligns with the principles of financial reporting and accountability for an Alabama cooperative? Option A. Present only a summary of the cooperative's income and expenses for the year, without detailed supporting financial statements. Option B. Prepare a comprehensive annual financial report including a balance sheet, income statement, and statement of cash flows, prepared in accordance with applicable accounting standards. Option C. Provide detailed financial information only upon specific request from individual members. Option D. Rely solely on unaudited financial statements prepared by an internal bookkeeper, without any external review, assuming no specific audit requirement is stated in the bylaws. The correct answer is B. Prepare a comprehensive annual financial report including a balance sheet, income statement, and statement of cash flows, prepared in accordance with applicable accounting standards. Explanation. The assessment process reveals a common challenge in cooperative financial reporting, balancing the need for transparency with the practicalities of record-keeping for a member-driven organization. This scenario is professionally challenging because it requires understanding the specific financial reporting obligations under Alabama Cooperative Law, ensuring compliance while also maintaining the trust and confidence of the cooperative's members. The cooperative's board must exercise careful judgment to select the most appropriate method for presenting financial information. The best approach involves preparing a comprehensive annual financial report that includes a balance sheet, income statement, and statement of cash flows, prepared in accordance with generally accepted accounting principles, GAAP, or other relevant accounting standards applicable to cooperatives in Alabama. This approach is correct because Alabama Cooperative Law, while not always mandating specific GAAP adherence for all cooperatives, strongly emphasizes financial accountability and transparency to members. Providing detailed financial statements allows members to understand the cooperative's financial health, operational performance, and how their capital is being utilized. This aligns with the ethical duty of fiduciaries to act in the best interests of the cooperative and its members, ensuring informed decision-making and preventing potential mismanagement. An approach that involves presenting only a summary of income and expenses without detailed supporting statements fails to meet the spirit of financial accountability. This omission prevents members from understanding the underlying assets, liabilities, or cash movements, thereby hindering their ability to assess the cooperative's true financial position and potentially masking financial irregularities. This violates the principle of transparency and could lead to a breach of fiduciary duty. Another unacceptable approach is to rely solely on unaudited financial statements prepared by an internal bookkeeper without any form of external review or audit, especially if the cooperative's bylaws or membership have not explicitly waived such requirements. While not all cooperatives are mandated to have audits, failing to provide a reasonable level of assurance on financial reporting, particularly for larger cooperatives or those with significant financial transactions, can undermine member confidence and expose the cooperative to financial risks. This approach neglects the importance of independent verification, which is a cornerstone of sound financial governance and accountability. Finally, an approach that involves presenting financial information only when requested by individual members, rather than proactively providing a comprehensive annual report, is insufficient. This reactive stance creates an information asymmetry and places an undue burden on members to seek out information. It fails to uphold the cooperative principle of member economic participation and democratic member control, which necessitates readily accessible and understandable financial information for all members. Professionals should employ a decision-making framework that prioritizes transparency, accuracy, and compliance with Alabama Cooperative Law. This involves understanding the specific reporting requirements outlined in the relevant statutes and the cooperative's own bylaws. It also requires considering the size and complexity of the cooperative's operations and the expectations of its membership. When in doubt, seeking guidance from legal counsel or accounting professionals specializing in cooperative law is advisable to ensure the highest standards of financial reporting and accountability are met. Question 13. Implementation of a profit distribution policy for an Alabama cooperative requires the board of directors to consider various factors. Which approach best reflects adherence to Alabama cooperative law and sound cooperative principles when deciding how to allocate net profits? Option A. Retain all net profits for future expansion and operational improvements without a formal resolution or amendment to the bylaws, citing general business needs. Option B. Develop a transparent distribution plan based on the cooperative's bylaws, articles of incorporation, and member patronage, ensuring all decisions are formally documented and justified. Option C. Allocate profits based on informal discussions and personal relationships among board members and select members to ensure perceived fairness. Option D. Distribute dividends to members solely based on the number of shares they own, regardless of their level of business activity with the cooperative. The correct answer is B. Develop a transparent distribution plan based on the cooperative's bylaws, articles of incorporation, and member patronage, ensuring all decisions are formally documented and justified. Explanation. Scenario analysis. This scenario presents a professional challenge for the cooperative's board of directors in Alabama, requiring careful judgment in balancing the financial needs of the cooperative with the equitable distribution of profits to its members. The challenge lies in interpreting and applying Alabama cooperative law, specifically concerning profit distribution and member dividends, while also considering the cooperative's long-term sustainability and the expectations of its diverse membership. Misinterpreting these principles can lead to legal disputes, member dissatisfaction, and damage to the cooperative's reputation. Correct approach analysis. The best professional practice involves a transparent and documented process for determining profit distribution that aligns with the cooperative's bylaws and Alabama cooperative law. This approach prioritizes adherence to the established governing documents and legal framework. Specifically, it requires the board to review the cooperative's financial performance, consider any reserves mandated by law or bylaws, and then allocate remaining profits in a manner consistent with the cooperative's stated purpose and member patronage, as outlined in its articles of incorporation and bylaws. This ensures that distributions are legally sound, equitable, and serve the cooperative's fundamental principles. Alabama law generally permits cooperatives to distribute profits to members based on patronage, but the specific mechanisms and limitations are often detailed within the cooperative's own governing documents, which must be respected. Incorrect approaches analysis. One incorrect approach involves the board unilaterally deciding to retain all profits for general operational expansion, without a clear, documented resolution or amendment to the bylaws that justifies this decision and outlines the specific purpose for the retained earnings. This bypasses the established procedures for profit distribution and can be seen as a failure to uphold the cooperative's commitment to returning value to its members, potentially violating the spirit, if not the letter, of Alabama cooperative law, which often emphasizes member benefit. Another incorrect approach is to distribute dividend solely based on the number of shares a member holds, irrespective of their patronage or contribution to the cooperative's success. Share ownership is a component of cooperative structure. Alabama cooperative law and common cooperative principles emphasize patronage as the primary basis for profit distribution. This method can lead to inequitable outcomes and may not reflect the true economic relationships within the cooperative. A third incorrect approach is to distribute profits based on subjective criteria or personal relationships among board members and certain members, without a clear, objective, and documented policy. This not only violates ethical principles of fairness and transparency, but also opens the cooperative to accusations of favorability and potential legal challenges under Alabama law, which expects prudent and equitable management of cooperative assets and profits. Professional reasoning. Professionals in this situation should first thoroughly review the cooperative's articles of incorporation and bylaws, paying close attention to sections detailing profit distribution and member dividends. They must then consult relevant provisions of Alabama cooperative law to ensure full compliance. The board should convene a formal meeting to discuss the financial performance and potential distribution strategies, documenting all discussions and decisions. Any proposed distribution plan should be evaluated for its fairness, transparency, and adherence to both legal requirements and the cooperative's founding principles. If significant deviations from historical practices or bylaws are contemplated, a formal amendment process or clear, board-approved resolution with thorough justification is essential. This structured approach ensures accountability, minimizes legal risk, and fosters trust among the membership. Question 14. To address the challenge of funding a significant capital expansion for a farmers' cooperative in rural Alabama, the Board of Directors is considering several financing strategies. Which strategy best embodies the principles of cooperation, particularly member economic participation and concern for community, while adhering to Alabama Cooperative Law? Option A. Pursue a large grant from a regional philanthropic organization, emphasizing the community-wide benefits of the expansion, and use the grant funds to cover the majority of the capital costs. Option B. Secure a substantial long-term loan from a commercial bank, leveraging the cooperative's assets as collateral, and inform members of the decision after the loan is finalized. Option C. Offer members the opportunity to invest in the expansion through preferred stock or member loans with a competitive interest rate, alongside a clear communication plan detailing the project's benefits to both members and the local community. Option D. Increase annual membership dues significantly and reallocate a portion of the general operating budget towards the capital expenditure, without offering members any direct financial return on this increased contribution. The correct answer is C. Offer members the opportunity to invest in the expansion through preferred stock or member loans with a competitive interest rate, alongside a clear communication plan detailing the project's benefits to both members and the local community. Explanation. The scenario presents a common challenge for cooperative leaders, balancing the immediate financial needs of the cooperative with the long-term principles of cooperation, particularly concerning member economic participation and concern for community. The cooperative is facing a significant capital expenditure, and the board must decide how to fund it without alienating its membership or compromising its cooperative identity. This requires careful consideration of how the chosen funding method aligns with the core principles of Alabama Cooperative Law. The best approach involves seeking member input and offering them a direct opportunity to invest in the cooperative's growth, aligning with the principle of member economic participation. This method allows members to benefit directly from the cooperative's success and reinforces their ownership stake. It also fosters a sense of shared responsibility and commitment, which is crucial for the long-term health of a cooperative. This aligns with Alabama Cooperative Law's emphasis on members contributing to the capital of their cooperative and receiving patronage dividends, or interest on capital, as outlined in relevant sections of the Alabama Code concerning cooperative associations. Furthermore, by offering members this opportunity, the cooperative demonstrates its commitment to education, training, and information by informing them about the investment opportunity and its potential benefits. An approach that prioritizes external debt financing without exploring member investment options fails to adequately uphold the principle of member economic participation. While debt financing is a legitimate tool, neglecting to offer members a chance to invest in their own cooperative's expansion can be seen as a missed opportunity to strengthen member commitment and potentially dilute the cooperative's member-driven capital structure. This could be viewed as a failure to maximize member economic involvement as envisioned by cooperative principles. An approach that relies solely on increasing member patronage fees or dues to fund the capital expenditure, without offering a proportional benefit or return to members for this increased contribution, is problematic. This could be perceived as an unfair burden on members and a departure from the principle of member economic participation, where members' contributions should ideally be linked to their economic benefit or involvement. It also risks undermining the voluntary nature of membership if members feel compelled to contribute financially without a clear return or say in the investment. An approach that seeks a large, unsolicited grant from a community foundation without any direct member involvement or a clear plan for how the community will benefit from the specific capital expenditure is also not ideal. While concern for community is a vital principle, this method bypasses the core cooperative principle of member economic participation and democratic control over capital allocation. The cooperative's primary responsibility is to its members, and significant capital decisions should ideally involve their direct participation and benefit, even when community benefit is a consideration. Professionals should employ a decision-making process that begins with a thorough understanding of the cooperative's strategic goals and financial needs. This should be followed by an assessment of how various funding options align with the 7 cooperative principles, with a particular focus on member economic participation, democratic member control, and concern for community, as these are most directly implicated in capital funding decisions. Engaging members early and transparently in the decision-making process, presenting them with viable options, and explaining the rationale behind each choice is paramount. This fosters trust and ensures that the cooperative's actions are consistent with its foundational values, as mandated by Alabama Cooperative Law. Question 15. The review process indicates that the board of an Alabama-based cooperative is considering adopting new member voting procedures. While researching best practices, they discovered that a neighboring state has a more streamlined process for proxy voting that appears more efficient. The board is debating whether to implement this neighboring state's process, their current Alabama-mandated process, or a modified version of both. What is the most prudent approach for the cooperative's board to take regarding member voting procedures? Option A. Adopt the more streamlined proxy voting procedures from the neighboring state, as they appear more efficient and are commonly used in other jurisdictions. Option B. Assume that if a practice is not explicitly prohibited by Alabama law, it is permissible to adopt procedures from other states that are more efficient. Option C. Implement a hybrid voting procedure that combines elements of both Alabama's and the neighboring state's laws, selecting the most convenient aspects from each. Option D. Strictly adhere to the procedures outlined in the Alabama Cooperative Law for member voting, seeking legal counsel if any aspect of the law is unclear. The correct answer is D. Strictly adhere to the procedures outlined in the Alabama Cooperative Law for member voting, seeking legal counsel if any aspect of the law is unclear. Explanation. The review process indicates a common challenge faced by cooperative boards when navigating differing state regulations. This scenario is professionally challenging because it requires the board to balance the operational needs of the cooperative with strict adherence to the Alabama Cooperative Law, while also considering the implications of a neighboring state's potentially less stringent approach. Misinterpreting or ignoring the specific requirements of Alabama law could lead to significant legal and financial repercussions for the cooperative and its members. Careful judgment is required to ensure compliance and protect the cooperative's interests. The best professional practice involves a thorough understanding and strict application of the Alabama Cooperative Law. This approach prioritizes the legal framework governing the cooperative's operations within Alabama, ensuring all actions are compliant with state statutes. Specifically, the Alabama Cooperative Law dictates the procedures for member meetings, voting rights, and financial reporting. By adhering to these specific Alabama requirements, the cooperative safeguards itself against legal challenges, maintains transparency with its members, and upholds the integrity of its governance structure as defined by its home state. This proactive compliance demonstrates a commitment to responsible stewardship and legal integrity. An incorrect approach would be to adopt the practices of the neighboring state simply because they appear more convenient or less burdensome. This fails to recognize that each state has its own distinct legal framework for cooperatives. Alabama law is the governing authority for an Alabama-based cooperative, and ignoring its mandates in favor of another state's regulations constitutes a direct violation of Alabama statutes. This could lead to invalidation of decisions made, potential fines, and legal disputes with members or regulatory bodies. Another professionally unacceptable approach is to assume that because a practice is common in other jurisdictions, it is automatically permissible in Alabama. This overlooks the critical need for specific legal counsel and due diligence regarding Alabama's unique cooperative law. The absence of a specific prohibition in another state's law does not imply permission or legality within Alabama. This approach risks operating outside the bounds of established Alabama law, potentially exposing the cooperative to significant legal liabilities. Finally, a flawed approach would be to implement a hybrid model that selectively adopts elements from both states without a clear legal basis for doing so under Alabama law. This creates ambiguity and a high risk of noncompliance. Without explicit legal guidance confirming the validity of such a hybrid approach under Alabama cooperative law, it is likely to be deemed noncompliant, leading to the same negative consequences as adopting the neighboring state's laws outright. The professional reasoning process for similar situations should begin with identifying the governing jurisdiction's laws. In this case, it is unequivocally Alabama cooperative law. The next step is to thoroughly research and understand the specific provisions of that law relevant to the decision at hand. If there is any ambiguity or uncertainty, seeking legal counsel specializing in Alabama cooperative law is paramount. A decision should only be made after confirming that the chosen course of action aligns with the explicit requirements and spirit of Alabama's statutes, prioritizing legal compliance and member protection above perceived convenience or common practices elsewhere. Question 16. Examination of the data shows that the Oakwood Farmers Cooperative in Alabama is facing significant financial pressures, necessitating a review of its operational structure to ensure long-term viability. The Board of Directors is considering a proposal to streamline operations by consolidating certain member services, which could lead to cost savings, but might also reduce direct member engagement in those specific areas. What is the most principled and legally sound approach for the Oakwood Farmers Cooperative to take in addressing this situation, considering its commitment to cooperative principles and Alabama cooperative law? Option A. Focus solely on maximizing operational efficiency and cost reduction, assuming that improved financial health will inherently benefit all members in the long run, regardless of the specific changes made or the process of their adoption. Option B. Present the proposed operational changes to the membership, clearly outlining the financial rationale, potential benefits, and any impacts on member services, and seek their vote or formal approval before implementation. Option C. Implement the operational changes immediately to achieve cost savings, with a plan to inform members of the adjustments and their necessity after the changes have been enacted. Option D. Secure external investment to cover the financial shortfall, making operational changes as deemed necessary by the board without extensive prior member consultation, to ensure immediate financial stability. The correct answer is B. Present the proposed operational changes to the membership, clearly outlining the financial rationale, potential benefits, and any impacts on member services, and seek their vote or formal approval before implementation. Explanation. This scenario is professionally challenging because it requires balancing the immediate financial needs of a struggling cooperative with its foundational principles of member benefit and democratic control. A cooperative's success hinges on maintaining member trust and ensuring that decisions prioritize the collective good over short-term gains that could alienate or disadvantage a significant portion of the membership. The Alabama Cooperative Law, while allowing for flexibility in management, fundamentally emphasizes member participation and equitable distribution of benefits. The best approach involves transparent communication and seeking direct member input before making significant operational changes that could impact their economic well-being or voting power. This aligns with the cooperative principle of democratic member control and member economic participation, ensuring that decisions are made with the informed consent of those the cooperative serves. By presenting the proposed changes, explaining the rationale, and allowing members to voice concerns and vote on the matter, the cooperative upholds its core values and strengthens member commitment. This process respects the ownership structure and ensures that the cooperative remains accountable to its members, as envisioned by Alabama cooperative law. An approach that prioritizes securing external investment without full member disclosure or consent fails to uphold the principle of democratic member control. Alabama cooperative law expects that significant decisions affecting the cooperative structure or member benefits be brought before the membership for consideration. Proceeding solely on the board's initiative, even with good intentions, bypasses the democratic process and can erode trust, potentially leading to member dissatisfaction and legal challenges. Another unacceptable approach is to implement the changes unilaterally, assuming members will understand or accept them after the fact. This directly contradicts the principle of member economic participation and democratic member control. It treats members as passive recipients rather than active owners, undermining the very essence of a cooperative and violating the spirit, if not the letter, of Alabama cooperative law, which is built on member engagement. Finally, focusing solely on the potential for increased efficiency without considering the impact on member services or equitable distribution of any resulting benefits is a flawed strategy. While efficiency is important, it must be pursued in a manner consistent with the cooperative's primary purpose, to serve the economic interests of its members. Ignoring this fundamental aspect risks alienating the membership and deviating from the core cooperative values. Professionals in this situation should employ a decision-making process that begins with a thorough understanding of the cooperative's governing documents and relevant Alabama cooperative law. This should be followed by an assessment of the proposed changes' impact on all stakeholder groups, particularly the members. The next crucial step is open and honest communication with the membership, presenting all options and their implications. Finally, the decision-making process should culminate in a democratic vote or formal member approval mechanism, ensuring that the cooperative's actions are aligned with its principles and legal framework. Question 17. Upon reviewing the operational strategy for an Alabama-based agricultural cooperative, the management team is considering a new partnership that offers significant short-term financial benefits, but may divert resources and attention from core member services. Considering the definition and importance of cooperatives under Alabama Cooperative Law, which stakeholder perspective should guide the ultimate decision-making process to ensure adherence to the cooperative's fundamental principles? Option A. The perspective that prioritizes the long-term economic and social benefits for the cooperative's members, ensuring that any external partnerships align with and enhance the cooperative's core mission of serving its membership. Option B. The perspective that emphasizes operational efficiency and convenience for the cooperative's management and staff, streamlining processes regardless of member impact. Option C. The perspective that treats the cooperative as a standard for-profit business, aiming to generate the highest possible returns for any investment, irrespective of member involvement. Option D. The perspective that focuses on maximizing immediate profits from external business opportunities, even if it requires a temporary reduction in resources allocated to member services. The correct answer is A. The perspective that prioritizes the long-term economic and social benefits for the cooperative's members, ensuring that any external partnerships align with and enhance the cooperative's core mission of serving its membership. Explanation. This scenario is professionally challenging because it requires balancing the distinct interests of various stakeholders within an Alabama cooperative, ensuring that the cooperative's foundational principles and legal framework are upheld. The importance of cooperatives lies in their member-centric structure and their ability to serve the economic and social needs of their members. Misinterpreting or neglecting these core aspects can lead to operational inefficiencies, legal disputes, and a failure to fulfill the cooperative's purpose. The best approach involves recognizing that a cooperative's primary purpose, as defined by Alabama Cooperative Law, is to serve its members. This means that decisions, even those impacting external parties, must ultimately align with and benefit the membership. This approach is correct because it directly reflects the statutory intent of cooperative law in Alabama, which prioritizes member ownership, control, and benefit. The Alabama Cooperative Law emphasizes that cooperatives are formed to provide economic advantages to their members, whether through shared purchasing, marketing, or provision of services. Therefore, any action taken by the cooperative's management or board must be justifiable in terms of its positive impact on the membership, even if it requires careful negotiation or compromise with non-member stakeholders. An incorrect approach would be to prioritize the immediate financial gains of a short-term contract with a non-member entity over the long-term stability and member benefits of the cooperative. This fails to acknowledge the fundamental principle that the cooperative exists for its members, not for maximizing profit from external transactions. Such a focus can lead to decisions that alienate the membership, undermine trust, and potentially violate the cooperative's governing documents and Alabama law, which mandates that benefits accrue to members. Another incorrect approach would be to solely focus on the operational convenience for management, without considering the impact on member participation or the cooperative's core mission. This disregards the democratic control and member involvement that are hallmarks of cooperative structures. Alabama law expects cooperatives to be responsive to their members' needs and to facilitate their active participation, not to create barriers or prioritize administrative ease over member engagement. A further incorrect approach would be to assume that the cooperative can operate with the same flexibility and profit maximization goals as a traditional for-profit corporation. This misunderstands the unique legal and ethical obligations of a cooperative. Alabama cooperative law establishes a distinct framework that emphasizes mutual benefit and member service, which differs significantly from the shareholder-centric model of conventional businesses. Professionals in this situation should employ a decision-making framework that begins with a thorough understanding of the Alabama Cooperative Law and the cooperative's own articles of incorporation and bylaws. They must then identify all relevant stakeholders and analyze how proposed actions impact each group, with a particular emphasis on the membership. The decision should be evaluated against the cooperative's core purpose and its legal obligations to its members, ensuring that any external engagement serves to enhance, rather than detract from, member value and the cooperative's long-term viability. Question 18. When evaluating strategic planning for cooperative growth in Alabama, which approach best balances the diverse interests of current members, potential new members, and the cooperative's long-term sustainability while adhering to Alabama Cooperative Law? Option A. Focusing growth initiatives on attracting larger, more influential members or external investors whose capital can accelerate expansion, potentially sidelining the needs of smaller or long-standing members. Option B. Prioritizing strategies that promise the highest immediate financial gains, even if they require significant changes to existing member benefits or operational structures without broad consultation. Option C. Implementing growth plans based on external market analysis and expert projections, assuming these will automatically align with the cooperative's internal dynamics and member expectations. Option D. Conducting extensive outreach to all member segments to gather input, analyzing feedback to inform growth objectives, and developing a plan that reflects collective member priorities and cooperative principles. The correct answer is D. Conducting extensive outreach to all member segments to gather input, analyzing feedback to inform growth objectives, and developing a plan that reflects collective member priorities and cooperative principles. Explanation. When evaluating strategic planning for cooperative growth in Alabama, a cooperative's leadership faces the professional challenge of balancing the immediate needs and desires of current members with the long-term sustainability and expansion of the cooperative. This requires careful judgment to ensure that growth strategies are both beneficial and compliant with Alabama Cooperative Law. The best approach involves a comprehensive stakeholder engagement process that prioritizes understanding the diverse needs and perspectives of all involved parties, including current members, potential new members, employees, and the wider community. This method ensures that strategic plans are built on a foundation of shared understanding and support, fostering trust and long-term commitment. Specifically, Alabama Cooperative Law emphasizes member participation and the democratic control of cooperatives. A strategy that actively seeks input from all member segments, analyzes their feedback, and integrates it into the growth plan aligns with the cooperative principles of voluntary and open membership and democratic member control. This proactive engagement helps identify potential conflicts early and allows for the development of solutions that benefit the cooperative as a whole, thereby promoting sustainable growth and adhering to the spirit and letter of Alabama's cooperative statutes. An approach that solely focuses on maximizing short-term financial returns without adequately consulting or considering the impact on existing members' benefits or the cooperative's core values is professionally unacceptable. This failure to engage members democratically violates the principle of democratic member control, a cornerstone of cooperative governance under Alabama law. Such a strategy risks alienating the membership base, potentially leading to decreased participation and undermining the cooperative's long-term viability. Another unacceptable approach is to prioritize the interests of a select group of members or external investors over the broader membership. This selective engagement creates an imbalance of power and can lead to decisions that are not in the best interest of the cooperative as a whole, contravening the principle of equitable distribution of benefits and the democratic governance structure mandated by Alabama Cooperative Law. Finally, adopting a growth strategy based on assumptions about market trends without validating these assumptions through member feedback or feasibility studies is professionally risky. This lack of due diligence can lead to misallocated resources and strategic missteps, potentially jeopardizing the cooperative's financial health and its ability to serve its members effectively, which is a fundamental ethical obligation. Professionals should employ a decision-making framework that begins with clearly defining the cooperative's mission and values. This should be followed by a thorough analysis of the current operating environment and potential growth opportunities. Crucially, this analysis must be informed by robust stakeholder engagement, ensuring that all relevant perspectives are considered. Strategic options should then be evaluated not only for their financial viability, but also for their alignment with cooperative principles, their impact on member welfare, and their compliance with Alabama cooperative law. A transparent communication process throughout the planning and implementation phases is essential for building and maintaining member trust. Question 19. The analysis reveals that a group of Alabama farmers wishes to form a cooperative to collectively market their produce. They are eager to begin operations quickly and are considering several paths forward. Which of the following steps represents the most legally sound and professionally responsible approach to forming their cooperative under Alabama law? Option A. Draft a simple memorandum of understanding among the founding members outlining their intentions and begin marketing activities, deferring formal incorporation and legal documentation until the cooperative is generating revenue. Option B. Focus on securing initial sales contracts and operational logistics, with the understanding that legal formation and membership details can be formalized once the cooperative is established and functioning. Option C. Utilize a generic cooperative template found online for articles of incorporation and bylaws, making minor edits to reflect their names and intended business, and proceed with filing without specific legal review. Option D. Consult with an attorney experienced in Alabama cooperative law to draft articles of incorporation and bylaws that comply with the Alabama cooperative law, and then formally file these documents with the appropriate Alabama state agencies, followed by a structured member recruitment process. The correct answer is D. Consult with an attorney experienced in Alabama cooperative law to draft articles of incorporation and bylaws that comply with the Alabama cooperative law, and then formally file these documents with the appropriate Alabama state agencies, followed by a structured member recruitment process. Explanation. The analysis reveals a common challenge in cooperative formation: balancing the diverse interests of potential members while adhering to the foundational legal requirements of Alabama law. This scenario requires careful judgment to ensure the cooperative is established on a solid legal and ethical footing, preventing future disputes and ensuring operational viability. The best approach involves a systematic and legally compliant process that prioritizes member engagement and clear documentation. This begins with understanding the core purpose and membership criteria, followed by drafting foundational documents like articles of incorporation and bylaws that comply with the Alabama cooperative law. Crucially, this approach emphasizes seeking legal counsel early to navigate the specific requirements of Alabama statutes, ensuring all steps are taken in accordance with state law and best practices for cooperative governance. This proactive legal engagement is vital for establishing a robust and legally sound cooperative structure from its inception. An approach that bypasses formal legal review and relies solely on informal agreements among a few initial organizers is professionally unacceptable. This failure to consult with legal counsel specializing in Alabama cooperative law risks overlooking critical statutory requirements for incorporation, membership rights, and governance structures mandated by the Alabama cooperative law. Such an oversight can lead to invalid formation, unenforceable bylaws, and significant legal challenges down the line. Another professionally unacceptable approach is to prioritize speed of formation over thoroughness. By adopting generic bylaws without tailoring them to the specific needs and objectives of the proposed Alabama cooperative, while seemingly efficient, this can result in bylaws that do not adequately address member voting rights, capital contributions, profit distribution, or dispute resolution mechanisms as required or permitted by Alabama law, potentially creating internal conflicts and legal vulnerabilities. Finally, an approach that delays the formalization of membership criteria and rights until after operations have begun is also professionally unsound. Alabama cooperative law often outlines specific procedures for member admission, rights, and responsibilities. Failing to clearly define these from the outset, in accordance with legal requirements, can lead to disputes over voting power, access to benefits, and financial obligations, undermining the cooperative's democratic principles and legal standing. Professionals should employ a decision-making framework that begins with a thorough understanding of the relevant Alabama cooperative law. This involves identifying all statutory prerequisites for formation, governance, and member relations. Subsequently, engaging qualified legal counsel experienced in Alabama cooperative law is paramount. This ensures that all organizational documents are drafted to meet legal standards and effectively serve the cooperative's unique purpose. A phased approach, moving from conceptualization and legal groundwork to formal incorporation and member engagement, ensures compliance and builds a strong foundation for the cooperative's success. Question 20. Comparative studies suggest that the fair allocation of capital contributions in cooperatives is crucial for member satisfaction and long-term sustainability. In an Alabama cooperative, an existing asset with an original cost of $500,000 has been in use for 5 years of its 20-year expected useful life. The cooperative currently has $1,000,000 in equity. A new group of members joins, contributing $250,000 in equity. If the cooperative's total assets are valued at their book value after accounting for depreciation of the existing asset, what is the fair allocation of the new member's equity contribution towards the book value of the existing asset, assuming a straight-line depreciation method? Option A, $125,000. Option B, $75,000. Option C, $250,000. Option D, $187,500. Correct answer is B, $75,000. Explanation. This scenario presents a professional challenge due to the inherent tension between maximizing returns for existing members and the obligation to fairly compensate new members for their contributions. In Alabama, cooperative law emphasizes democratic control and equitable distribution of benefits, requiring careful financial management and transparent allocation of surplus. The challenge lies in balancing these principles when a significant capital improvement is funded by new member equity. The best approach involves calculating the depreciation of the existing asset and then determining the new member's pro rata share of the remaining book value, adjusted for the new capital infusion. This ensures that new members are not paying for an asset that has already depreciated significantly, while still contributing to the cooperative's overall capital structure. Specifically, the calculation would be: 1. Calculate the total depreciation of the existing asset. Depreciation equals original cost times useful life in years / total expected useful life. Depreciation equals $500,000 times 5 years / 20 years equals $125,000. Determine the book value of the existing asset. Book value equals original cost depreciation. Book value equals $500,000. $125,000 equals $375,000. Calculate the total equity after the new member's contribution. Total equity equals existing equity plus new member equity. Total equity equals $1,000,000 plus $250,000 equals $1,250,004. Calculate the new member's pro rata share of the book value of the existing asset. New member share of book value equals new member equity / total equity times book value. New member share of book value equals $250,000 / $1,250,000 times $375,000 equals $75,000. This approach aligns with the principles of equitable contribution and fair value in Alabama cooperative law. It prevents existing members from unfairly benefiting from the depreciation of an asset that new members are helping to fund the continued use of. An incorrect approach would be to simply allocate the new member's equity proportionally to the total assets without considering the depreciation of the existing asset. This would mean new members are effectively paying a higher price for a depreciated asset than existing members initially did, violating the principle of equitable contribution. Another incorrect approach would be to allocate the new member's equity solely towards the new capital improvement, ignoring their contribution to the overall capital base and the ongoing use of existing assets. This fails to recognize that new members are joining an established cooperative and should contribute to its overall financial health and asset base, not just new additions. Finally, an incorrect approach would be to ignore the depreciation and allocate the new member's equity based on the original cost of the asset. This would overstate the value of the existing asset from the perspective of new members and lead to an inequitable distribution of capital. Professionals should approach such situations by first understanding the cooperative's governing documents and Alabama cooperative law. They must then perform a thorough financial analysis, considering asset depreciation and the fair allocation of capital contributions. Transparency with all members regarding the methodology used is paramount to maintaining trust and adherence to cooperative principles.